Is the rally overdone or are we just starting?
Actually, in March, if you look at my Twitter feed, I had tweeted on March 28th that this was the perfect time to get into the markets, that I did not know whether it was the exact bottom, but it was certainly somewhere around the bottom. And also that, uh, we all understand the risk of being in the market. But this was a time when the risk was more in not being invested and therefore missing out on an up move. So at that time, the index was in the 16,900 range. I mean, the Nifty. Of course, it has had a run since then. But even so, my assessment still is that the risk is still of missing out on an up move relative to a crash. I do not see a risk of a crash very imminent. And I still think we are closer to the beginning rather than the end of the run up.
For the first 6 months, which ended on June 30th, the two portfolios that Devina manages have outperformed both the Nifty as also by their peers very handsomely. So it's a 10.5% gain on First Global IS 50 in the past 6 months compared with the 6.5% index appreciation that you've seen. And the First Global IMAP, which has an overlay of a lot of gilt as well as gold, is still up 9.5%. Devina, as I was scrolling through your portfolio, amongst the top 10 odd stocks, you have three IT companies, of course, two very well known, Infosys as well as TCS, and one mid cap that has done wonders, which is Nucleus Software. Overall, the software sector hasn't done much. The index just up about 2% year to date. What do you think is going wrong? Do we have to wait much longer, or is the Indian software story now getting a little jaded?
Shell, the thing is this, that if you looked at it last year, first half also, IT did not do very well, IT services. And at that time, the logic for it not doing well was supposed to be that the whole world is digitizing and there is so much demand for people with technology backgrounds that they will not get enough employees. The employees will be too expensive and therefore costs will go up and margins will get squeezed. This year, the story is supposed to be something the entirely opposite. If you go to the base of it, saying that there will not be demand. So, both cannot be true. So, I think, this is a little overdone because what had happened was that there was a slowdown in some of the Western economies. So, what happens is that the orders you're supposed to get this quarter get pushed and may go on to the next quarter. But it is not as if that fundamentally something has gone totally wrong with the industry and it will never revive, because the whole move towards even non-technology companies becoming more digital, more technology oriented is not going to go away. So we are not super bullish on the sector, but we are still slightly overweight on the sector.
Okay, so let's presume that just as banks were out of favor a couple of years ago and now they are the toast of the town, we'll possibly see another fresh rally coming into software stocks. Coming back to banks, Devina, we've seen a cleanup of the entire public sector balance sheet. We've seen very high credit growth. And just as you rightly mentioned, when you look at quarterly numbers, the fourth quarter was really good for PSU banking space. Is this something new that is coming on your quant radar? Mathematically, how do you see these, four or five top PSU banking brands performing, given that you do a lot of quant-based analysis as well?
So actually, as I said, see, in 2020 and 21, we had very little banks, in fact, which was a big risk because the index has a big banking weightage. And banking is a sector where I'm always a nervous investor because you don't know where the bad things are hiding, where the negative surprises are hiding. But middle of 2022, roughly about a year ago, 11, 12 months ago, we changed our stance on banks. And part of it was what you mentioned, that credit growth is good. The NPA cycle was largely behind them. And also, when interest rates go up, their margins go up in the beginning, at least, because you reprice increase interest rates on the loans immediately, whereas interest rates on deposits increase much more slowly. So those were the factors, and also that the fact that they had been underperformers, that itself, once a sector
Absolutely.
or even a market which has been underperforming comes out of that, then you can expect a good run. And in 2020, banking was the only sector that was in the negative. In 2021, it was not in the negative, but I think the Nifty was up 22% and Bank Nifty was up only 11. So it did only half as much. So when it was coming out of that, we were clear that it would do better. Of course, we didn't take a big bet, but we did go to market weight or slightly above. We are somewhat above market weight now, and we continue to like the sector. We think it will continue to outperform at least for a while.
If you like the video, do like, comment, share and subscribe.